Welcome to Rice TVX. On today's live Rice report, I am joined by Gareth Soloway, 20-year plus veteran trader, the master of technical analysis. He's been on the show many times, and there is a playlist in the playlist section, and I also have that linked down below in the video description. Before we begin, a few quick messages from the sponsors of Rice TVX who make it possible to bring this content to you.
Start trading crypto today. Sign up for our step-by-step video series to get set up with the best trading tools, start analyzing charts, enter and exit a trade properly, and most importantly, see if crypto trading is right for you. Join us at bitlabacademy.com.
Be sure to smash that like button because it helps other people to find these kind of videos in the YouTube algorithm flow and helps people find Rice TVX. You also find information about the sponsors, BitLab Academy, Monarch Wallet, and Presearch in every video description. All right, now before we begin the show, one way that you can help out and support Rice TVX, in addition to becoming a patron and joining on Patreon, is by taking advantage of my partnership with Money Metals Exchange. And that means you can get a free ½ ounce of silver. Get your free ½ ounce of silver. Take full advantage of my partnership with Money Metals Exchange in 5 easy steps. 1. Visit moneymetals.com. 2. Be a first-time buyer. 3. Purchase a minimum of $100. 4. Use the promo code RICE. 5. Get a free ½ ounce of silver, and it's an additional way to support the channel. All right, ladies and gentlemen, again, I do appreciate you guys taking the time to tune in for today's live interview with the man himself, Mr. Gareth Soloway. Welcome back to Rice TVX, my friend. How are you?
Hey, I'm doing well. Thanks for having me back.
I always enjoy the conversations, and I know that you have an incredibly busy week, and you still have some things on your plate today, so I'm going to be very respectful of your time. We're not going to be chit-chatting, not getting into any personal stuff. What I will say is this interview will be probably roughly about 35 minutes-ish. We're going to get right straight to the point. You can find links down below, just so you know, for Gareth Soloway's Twitter account if you want to follow him on Twitter. And also, if you're interested in checking out inthemoneystocks.com and verified investing crypto, be sure to check those out. We'll talk briefly about these towards the end of the video, as we always do. Check out the playlist in the playlist section. And where do you want to begin, my friend?
Oh, my goodness. I tell you. I think, first of all, we've seen this big rollover today in the afternoon. So this morning, the markets, equity markets, Bitcoin, we saw some big rallies taking place on the back of the jobs report. So the jobs report, for everyone out there, basically came in just perfect for what the market wanted. So the number wasn't too hot, meaning it wasn't too strong, it wasn't too cold, it wasn't too weak. It was kind of right in that middle section where you saw people coming back to the workforce, unemployment creeping up just a little bit, but the jobs still were created about 300,000, a little bit over that. So I think the market liked that initially. And then, lo and behold, and this is always the shady part of Wall Street, come noon, in the early afternoon, we get a rumor about something with Nord Stream 1, the pipeline from Russia, and like this. And then all of a sudden, the market's just dumped out. And again, I'll show my S&P intraday chart, but I mean, this was an epic reversal
Give me
on the
one
charts.
second to pull up your chart. Give me 1 second.
Yeah, no
Sorry.
problem.
Okay,
so here we opened up, we rallied, we were up over 1% on the S&P, and then look at what happened there. We've had a little bit of a bounce here, but again, notice how this is going into a holiday weekend. A rumor like this basically doesn't make anyone want to buy going into the 3-day weekend, at least for the stock market. Now, you could trade crypto, obviously, over the weekend, but for the stock market, this made people nervous. We saw the sell-off, and Bitcoin, of course, as a risk asset, followed suit. You can see the same sell-off right there and the little bit of a bounce right here. So I think the bottom line is that, we'll have to see how things go. I was a little disappointed in this kind of reversal today. It looked like maybe Bitcoin was going to climb off of this major support here, which is the 2017 highs. Earlier today, it was kind of testing that 20,500 level again. And then today, again, by the afternoon, we find ourselves just below 20,000.
Yeah, I was just looking at the price. It's crazy where it seemed like we had really good, strong support. And I mean, I guess it's still acting as good support because we haven't really gone too far below 20K. It's just been minorly kind of touching under, coming right back up, which I mean, it's interesting. I mean, the whole Jackson Hole thing really, I think, took the markets by surprise because, you know, like me and you, I think we think very similarly, whereas we've seen the CPI numbers go down, still high, but they went down. And we have a whole nother CPI data that's going to be reported before the next FOMC meeting. So I feel as if what Fed Chair Powell did at the Jackson Hole speech, which had nothing to really do with the Federal Reserve and their decision, it psyched out the markets, and I think that was the intention of it.
I think you're 100% right. So if you look at it from Jerome Powell's viewpoint, he has to continue to keep pressure on the stock market to not let asset prices kind of advance. Remember, when asset prices go up, people feel richer. They're more willing to spend more money, which is exactly what he doesn't want right now, because that's going to make inflation go up versus down. So he wants people to kind of lose money in assets, because then they're like, oh my goodness, I can't go out and buy a new car. I can't go buy a new fridge. And if he were to say, hey guys, we're coming to the end of this tightening cycle, soon we're not going to tighten anymore, I mean, this market would just rally like crazy and it would work against him. So he's got to talk a tough game, even if secretly I think he thinks like, okay, I have to be careful here because I can't print our way out of the next recession like I have in the past. So he has to be careful what he says and kind of talk a tough game, even if he doesn't believe it deep down.
Yeah, I get that. Now, let me ask you, have you seen the Anthony Pompliano had Nick Carter on his show recently, and there's been a couple other YouTubers that have been sharing this clip. Are you aware of this recent conversation?
No, but I'd love to hear about it.
So Nick Carter said that, and I'm paraphrasing just based off notes. So Nick Carter says that what basically is going on is that the Fed cannot raise rates to whip inflation without bankrupting everything. And to get into that, he says that there's so much sovereign and corporate debt that the high rates, people would become insolvent quickly. He mentioned that in the 70s, Volcker raised rates to 20%. But he says now if we raise rates 5%, our government would default. And he also says that the debt to GDP is 120 as opposed to the 70s when it was 30. And the deficit is around 7% this year as opposed to 2 to 3% in the 70s.
Yeah. No, he's right. I mean, he's right. Interest rates at this point, there's no way they can go back because you have so much debt that needs to be rolled over. Not just, by the way, not just from the government. You're talking about corporate debt too, which is I mean, you're talking
corporate and sovereign debt, you know, when you combine the two. So that was because sovereign debt, for people that don't understand, would just be like the money that me and you owe in debt.
Right.
Individuals, not nations. So not even including government debt, just the level of corporate and sovereign debt. If, you know, they raise rates too high, it would quickly, you know, escalate to insolvency, which, you know, it kind of goes back to that question I asked you the last time you were on, which was if the Federal Reserve was to continue to raise rates, they're going to crash the stock market. If they reverse course and start to inflate again, they're going to inflate the stock market to the point that it crashes.
Yeah.
And that's kind of backing up what Nick Carter is saying, which is like the Fed cannot be as aggressive as they're saying. And if anybody had any sort of critical thinking and intelligence, they would have just literally just took what Fed Chair Powell said at Jackson Hole as BS.
Right. Right. I mean, the main key here is that investors are emotional, right? As you know, human beings were emotional. So you hear that and the jerk reaction is like, holy cow, we didn't expect that. And then you create this selling pressure. But in reality, my guess is within 2 months from now, we're all going to start, even retail investors will start to realize. And my guess is you're going to get a 50 basis point hike in September, 25, one of the next meetings into year end, and then that's it. I think that's it. I don't think that they can jack it much more than that. Otherwise, like you said, you're either going to crash the market and you're going to cause a default situation that they're aware. I mean, it's like kind of do what I do, not what I say kind of thing. Like it's one of those things where they have to talk that tough game because they're trying to bring down inflation with all the powers that be. And verbal is one of those things, talking, right? So by talking it down, they can bring it down, and then maybe they don't have to crash the economy fully like we fear.
So Nick Carter did say that he sees Q4 at the latest for a reversal. And another thing that I found interesting, so the job report information came out today, and I feel as if the job report information is going to stay fairly steady. But and this is something else that I've gathered from a couple different economists, is that once we get past the holiday seasons, because there's still extra hiring going on for seasonal work. When that ends, they're not going to be able to manipulate these reports the way that they're currently doing.
Yeah, so you have seasonal adjustments and seasonal hiring, right? So starting really around like October going into November, where you have Black Friday, all that stuff, you'll see a lot of just natural hiring. But if you just pay attention to what's going on Wall Street, like Snapchat just announced they're laying 20% of their workforce off. We've heard so many other companies, and it's not like those companies are isolated. So those are just corporate ones that have to do it because they have their stocks. There are tons of businesses in the US that are thinking the same way. And so it's coming. It's going to be a wave of layoffs. And you're going to see, like you said, I think you're going to see generally maybe just a slight weakening for the next few months. And then it's going to kind of catch up to this market. And one thing to remember about the employment market is it's a lagging indicator, right? So when the economy starts to get a little rough, business owners don't right away say, oh, we had a bad month, let's fire everyone or let's lay off everyone. They say, well, maybe that was a bad month, let's give it till next month. And then they say, oh, okay, one more month. Okay, now I have to finally lay people off. Because obviously they don't want to lay someone off if it was just a fluke of a month and then they have to hire someone new and train them, right?
Right. No, you're totally right. I think too, it just, when you have multiple quarters of decline in GDP, that obviously is making the companies think. And then there's a lot of speculation that we could see Q3 be in that same position as well, which would be fascinating. That's why I say when the government says that we're not in a recession, regardless of changing the definition, we're not. We're not in a recession. We're going in a depression.
Yeah.
So they didn't lie in that sense. But okay, so I know a lot of people are really interested in chart information, and you kind of briefly touched on some things. So you got the Bitcoin chart pulled up. Usually you come on roughly every 4 weeks. I would maybe like to get you on sooner, maybe right before or after the FOMC.
Yeah, let's do that.
Which is
maybe
like the 21st,
right
22nd.
Around there would be fascinating. Yeah, for sure.
I would love that, because I mean that's obviously going to be playing into because we'll have the CPI data before then and the PPI data to be able to get some kind of our idea of where it's going to head.
Yeah. So, I mean, just looking at the Bitcoin charts, I mean, basically there's an easy level for everyone to follow. It's this trend line right here, which is around 19,500 to 600. And the reason that, again, is a major level, it's the last peak cycle high, right? So 2017 high, we did that full round trip back to that level. Over here, we kind of came into it. We pierced it briefly, stopping out the stops that had bought right above there, and it then floated up. Then you broke down again. So the question is, to me, there's not a question of if Bitcoin's still going to go lower or not. It is. The question I have is, does it bounce first to the upside before rolling back over and heading lower? But again, I'm in the camp where you have a situation where this is a bear market 4-year cycle in Bitcoin, right? There's no denying that. We've been in a 4-year cycle now since 2009. And this is the first cycle for Bitcoin where you don't have Fed printing money at this point, at least. And so to me, it doesn't make sense that the cycle would be over already with only a 70% drop versus an 80 to 85%, which is what we usually get in a bear market in Bitcoin. In fact, with the Fed lack of printing, you could even argue this could be the worst bear market we've experienced in crypto since its inception.
Yeah, no, 100%. And what I'm kind of thinking is, based off of what you said, and what I'm thinking is that between now and the FOMC meeting or end of September, we could see that Bitcoin go below the 17.5 number.
Yep.
But I would say if we're saying at the latest, Q4 at the latest for reversal of the Fed, which indicates right into midterm elections, conveniently, we'll start seeing some more upside action, I feel. But I feel as if before we hit below the 17.5 in September, that we will see some sort of movement upward.
Yeah.
Another, like, maybe just fake out before we go down below that 17.5. How are you feeling with what I just said? Because I'm not a technical analysis master like yourself.
I mean, I actually agree. I think right now you have a lot of people saying, "Oh, look, it's a bear flag. Here was a bear flag. Look what we did. Here was a big bear flag. Look what we did." And it's almost too easy. And listen, maybe it does happen, but a lot of people expecting us to break down here. I think that you might see a little bit of a pullback in the dollar. In fact, this morning we did see a pullback until that kind of nervousness over the Nord Stream European pipeline to Russia and so forth. But before that, the dollar was actually falling, which is great for risk assets. That's what we need to see Bitcoin really get a pop.
Great
So
for our ally nations too, though. It's great for our ally nations.
Yeah,
because it doesn't put as much pressure on them as we talked about. Sorry for the interruption.
No, you're fine. You're fine. But yeah, so I'm kind of in the camp where I still think there's a chance, as long as we're holding this 19.5-ish area, we could get that little bit of a move up. And then I think, again, later, within a month, 2 months, we start to curl over and really see that bigger drop. And I still have a target. I mean, you might see a bounce around 17.5, but I still think we're going at minimum down to 12 to 13,000 down here. Just tons of support down here, but it makes sense that we probably are headed there.
Yeah, the consensus that I'm gathering is 12 to 14 in that range, unless there was some sort of black swan event, which could take it below further. I mean, there is Binance is still technically under investigation. There could be some things coming out of that. So there's a lot of potentialities. There's even some talk about after Labor Day, some kind of information about regulation with crypto from the Biden administration coming out.
Yeah.
And, that could be, depending on what's said, it could put a lot of fear in the market in that aspect. How are you feeling about Ethereum? We have, Bitcoin doesn't have the same thing happening as Ethereum. Ethereum is looking at within the next 10-ish days, something like that.
Yeah.
We're looking at the merge taking place, changing their engine and driving down the highway 100 miles an hour, going from proof of work engine to a proof of stake engine.
Yeah, so I mean,
nothing's going to happen.
I think long term this is a good move for Ethereum. I don't think in the near term. I think in the near term you could say that the rally. I mean, Ethereum rallied from under 900 to over 2,000, right? So I mean, that's a huge over 100% move versus what Bitcoin had, this very, very minor percentage comparative move to the upside. So I think that, again, a lot of that upside was the merge. People getting excited, buying in, saying, "Oh, this is going to be a game changer." My one worry would be that once it happens, and that it changes the long term of Ethereum, but the fear and greed and fear right now is kind of ruling things. I would worry that there still is downside on Ethereum until crypto, until Bitcoin bottoms out, all of these things bottom out. It could still be under pressure. Now, maybe it doesn't go percentage wise as low. Maybe it holds this low down here. We'll have to see. But I do think, after the merge, I do think we'll see some sort of rollover.
So you don't think that we'll see another pump potentially for the news aspect with the Ethereum merge?
I think that's still possible. So if we see a weakening dollar, I think you could have one more move up on Ethereum to the 200 moving average right here. But once that kind of hits, my guess is we'll then see the rollover occur and it kind of starts to head back down.
And one thing I want to let people know is, they're really interested in your analysis, that there's two ways that they can kind of get in your head and learn from what you're doing. And that would be via Verified Investing Crypto, which I am a member of, and I get to see the videos and I super enjoy it. Like, I cannot say how great of a resource that this is. And I appreciate what you're doing. And then if people want to get involved into like the stock side of it, the traditional legacy system, you could check out inthemoneystocks.com. But wanted to throw that out there so that people can, when they're looking at what you're saying and impressed by it, I want them to know that they can, kind of get into a private membership club and join in with what you're doing and kind of get an insight. And I know you talk about other cryptocurrencies. I want to get into gold and silver. I definitely want to talk about DXY, potentially stonks and oil, but was there any other cryptocurrencies that you wanted to put any focus on?
Not really. I mean, I think Solana was looking really good earlier today. I mean, it was starting. It's holding this key support line, and again, it'll be interesting to see if it's able to get off of this line. But just like Bitcoin, it's kind of holding that big support line. Avalanche, same kind of situation there. Both of these were looking better. Now they're kind of stalling out a little bit, both in the lower ranges of the chart. But again, I think at this point, it's important to just take it very carefully. Like if you're swing trading cryptos, I think that's fine to do like a Solana, an Avalanche, a Cardano, a Polkadot. But if you're looking longer term, stick with the best of breed with Bitcoin and Ethereum, because you just don't know which ones are going to survive the regulation, right? We know that Gary Gensler has said, except for Bitcoin, most of these are securities. What does that mean? What kind of regulation are they going to have to abide by? And then will other technologies from other coins take better precedent? Will they take over as well? So for me, when I'm looking at my long-term HODL portfolio, I'm just trying to stick to the best just to be safer.
No, that's a smart move. Totally a smart move. And so with what I was asking about the charts, where do you want to go next? You got gold pulled up.
Yeah, let's talk about gold. So this is a cool move on gold today. Number one, we had a nice little double bottom here. Gold, again, had been in a sell-off with the dollar, sharply moving to the upside. What I liked about today's price action, and this is just relevant to today, is that we saw this big move up on an intraday basis on the dollar. So the dollar early in the day was down, which caused a surge in gold. And then the dollar ripped higher on that Nord Stream news. And gold actually held up. And that's something that I pay attention to, because that's something that's not supposed to happen. And it shows relative strength in gold. So again, we'll have to watch and see what happens next week. But right now, that's telling me that there's some positives here in the gold market. I mean, you can see some of these gold miners, like look at Newmont Mining here. Newmont Mining having a good day. But I mean, the stock has just been decimated, down from 86 or 87 to about 42 here. To me, these are very interesting. I like beaten down quality miners that, everyone is just throwing them in the trash, but they're still quality names. And so I'm like, all right, well, what's a small amount of money in these if they start to have a big bounce, if gold starts to perform? So I think gold, again, I continue to think gold is probably the safest place for us to be as investors. It's not the sexiest. It's not going to make you 100% in a couple days or weeks or months.
Right.
But sometimes preservation of capital is a lot. That means a lot.
Well, let me ask you this, because you got the gold chart pulled back up. Hasn't gold done exactly what you said pretty much through this bear market?
Yeah.
As far as I understand, it is the one asset commodity that's actually held the majority of its value.
Yes. Yeah, exactly. So
again, it's preserving what you have.
That's right. Going into this year, in fact, you can even argue that you've gained on gold, and I'll show you this really cool example in a second. But basically, gold has gone sideways. I think it's down a few percentage points on the year. But when you compare that to what the S&P is down, or what Bitcoin's down, or what Ethereum's down for the year, it's awesome. Like everyone in the world would say, "Oh, I would have rather have been in gold." But the kicker is this, right? So gold is down about 5% for the year. We started the year on gold around 1,800. We're at 1,713 right now. So pretty minor move. But what's amazing here is look at the dollar. The dollar since the start of the year has gone up about 17%. So in a normal world, you would say to yourself, okay, well, if the dollar goes up 17%, gold should be down 17%. But instead, gold is only down like 4 or 5%. And so you've actually gained buying power by being in gold. It's very cool.
But did it have to do with what the Fed did to take out certain indicators that would evaluate, like, when they're taking out was it the M1 or M2 money supply? Just doing different things. And at the same time, I don't really think the government or the Federal Reserve wants the dollar at this point to be this strong.
Yeah.
because
No,
this,
I
like
agree.
I said it to people, and it's hard for me to explain it, but the strength of the dollar will be the death of the dollar.
Yes. Yeah, you're right about that. So there's no doubt that, and you can see the way assets react to this, right? So the Fed likes the fact that the dollar is pushing assets prices down, but at the same time, it's hurting the economy. Now, we all like the fact that the dollars we hold are worth more. It's nice like that, right? Everyone's hearing about inflation, but in reality, the dollar's actually gotten stronger relative to other currencies. But in the long term, you don't want that. In general, companies do better with a slightly weaker dollar. A lot of companies like IBM, they reported earnings not that long ago, and they lost $3 billion because of currency conversion, meaning they sold something in yen, and by the time they converted it from yen back to dollars, the dollar had spiked and they got way less dollars for that yen. And so
Right.
it actually causes a lot of losses for these corporations, which then translates to lower earnings, which then translates to lower stock prices.
It's so insane.
Yeah.
It is
It's
insane.
wild. Now, the best scenario, by the way, it is a stable dollar. Like what's going on, by the way, what's going on in the bond market is ridiculous. Like historically, this is
Talking
unprecedented.
about treasury bonds.
Yeah, to see the moves in yields like they're moving. I mean, like holy cow.
It's
And what that's
manipulated.
that should scare the crap out of everyone because that tells you the system is broken.
Well, the Federal Reserve came out. I'm not sure who it was specifically. We're telling people not to look at the 2 and 10 year indicator year bonds as for the inversion. And then I was looking at something that George Gammon had done with a video with his assistant, where they went through all the different time frames, and it's completely inverted all the way around, not just on the 2 and 10 year.
Yep. Yeah,
So,
I mean,
yeah, and that's another thing too that Gregory Mannarino has said, is that pay attention to the debt market, the bond markets. That's going to signal the end. When shit hits the fan with the bond markets, we are in trouble.
Yeah, I agree. And I would even dare say that the bond market is calling Jerome Powell's bluff in terms of Jackson Hole. Even though we've seen bond yields go up recently a little bit, they're not above where we were in June. And so even though you had this ridiculously, probably most hawkish comments from Federal Reserve Jerome Powell at the Jackson Hole comment section, you didn't see yields make a new high. And so what that's telling you is that the bond market is saying, no. You're talking a tough game here, but you're not going to be raising rates higher than what we expected in June.
No, and I agree.
Yeah.
Which is the reason why I thought that the market shouldn't have really let this negatively affect things. And, but unfortunately it did. Okay. So silver is my baby. I love my silvers. I think silver is probably one of the most unappreciated commodity assets out there. It's easily attainable by the everyday individual. You could buy fractions of it. Where are we at with this beautiful thing?
So silver has actually hit a major level here. You have number one, this channel, and we've just pierced the low end of the channel. And you could see when you were down here, you bounced to the high end, then you pulled back, high end, back down. Then we hit the low end, we bounced, and then here's the low end again. So basically channels are wonderful because they give us general levels where you should start to expect a reversal in price. Then you add in this trend line connecting the high from 2016 through the high from 19 and the high from 20, and you just touched that as well. So this should be a pretty decent level of support on silver. So I actually think silver is really attractive. We are getting a bounce in silver. It's off of its highs, but I actually like silver here. I think it makes a lot of sense.
Excuse me. What are we sitting at right now? $18-ish?
Yeah, just above 18.
Something got in my throat. I can't stop coughing.
Oh,
Sorry.
no worries.
Where do you want to go next? And I know you're limited on time. Do you want to go into like some oil?
Yeah, let's take a look at oil. I think
because I'm really alarmed by what's happening in Europe with the ESG initiatives, where there's not utilizing the nuclear power and using more of coal, and causing absolutely insane high energy prices to the point that people are, I guess, starting fires to stay warm. So I'm curious where we're at with this.
Yeah, so at least on oil, what we are seeing is that you're sitting on support here. You can see this pivot high from 2021. That is what we hit here. We then bounced, and now we're back down to it. My guess is we're going to break lower in oil and head to the next major support, which actually all the way goes back to 2018. And this is kind of where I see oil being going into the midterms, maybe just after the midterm elections, around $76 a barrel. So I've been, ever since we were at 130 to 120, I've been a bear on oil. I never understood the thought process of like, oh, Russia's going to be, pulling all their oil off. Russia needed the money. They always did. They're just selling it to Russia, to China, and to India at a much cheaper level. But it's all the oil's going onto the open market. And then you figure out that the global economy is slowing. And it's like, okay, well, slower demand, equal supply as there was, price should go down, and it has gone down.
Okay. Yeah, I mean, I think a lot of that too has to do with midterm elections.
Yeah. Yeah, there's no doubt about the strategic reserve release. I mean, they had to do it, right? I mean, not only to help people, but just to, talk about an unpopular president until maybe the last couple months, and he's still relatively unpopular, but
right.
they got a few wins under their belt, you could argue, before the midterms, which is what they were trying to do.
Exactly. It worked. And you can kind of see like these kind of things historically happening in these cycles.
Yep. And that, by the way, that's been one of my talking points for why I didn't believe oil was going to go higher anyways, is because I've been around for 20 years, and every midterm or presidential election, if oil was spiking prior, it always pulls back going into these elections. Doesn't matter if it's a Republican or Democrat. It's just, that's what they do. They make sure that they get those oil prices down so people are happier.
It is what it is. It's the political game, man. It sucks. Yep. And hopefully you will get to a point where we start changing it.
Yeah, for sure.
So like the S&P 500, NASDAQ, what are you thinking? I guess is a good point.
Yeah, so S&P 500, nasty reversal today. We do have a lot of support that we tagged yesterday, and we had a good reversal day. So I think I'm watching very closely to see where do we go today into the end of the day. Do we take out yesterday's lows? Do we hold it? If we hold it, you have a possibility of a little short-term bounce, but the market's going lower. The bottom line is you're going to get bounces. We're in a bear market. Bear market rallies are known for being rip your face off rallies like this one was. But eventually you get the sell off again and you'll make lower lows. And I still have a target of basically the pre-COVID highs of where we're headed, probably by year end or early 2023.
Interesting. And I'm assuming that you're still thinking that during this time period, we're going to see a complete correlation with the S&P, NASDAQ, traditional stocks with crypto.
Yeah. Until we get more clarity. So I think the keys to a crypto bottom are, number one, partially a pivot of the Fed. So once the Fed's done hiking and the dollar starts to kind of top out and pull back, that's number one. And then I really think regulation is unbelievably important. I think regulation initially will be viewed with fear. But one thing I've learned from Wall Street that translates over to crypto is that whether it's good or bad, the investors want to know the facts. Like, what rules do these companies, what rules do these cryptos have to abide by? And then you can see bigger money coming into the space. But there's no way. You're not going to get a pension fund that has $5 trillion to allocate anything to crypto without more understanding of
clarity.
What rules there are.
Clarity. That's what the traditional type people, the people that have dealt with like the stock markets, that's what they definitely want. Yeah, they don't want to deal with the wild west. They want clarity. And yeah, no, I agree.
Yeah. So it's going to be a while. I would say this is the next, basically into year end. I'd expect some pretty wild action, and then I really do hope we start to get some of these things out of the way. Let's get that final flush in crypto. Maybe it coincides with some regulation. We get kind of some clarity on things, and then even as an investor myself, then I'll start allocating more money to crypto. But I'm not going to commit a ton without knowing what Gary Gensler is going to come up with.
Which makes sense. And you've been playing this game for quite some time. And you're damn good at it now after 20 plus years. So I'll go ahead real quick, man. We are at the 35-minute mark, which is right in the time pocket that I was trying to make sure I was being respectful of.
Thank
I'm
you.
going to really quickly again share links for your Twitter account, for inthemoneystocks.com, and for Verified Investing Crypto. Do you really quickly want to say anything about what you're doing with those two websites?
Just that I do my best to, the videos that I put out each day, educate people. I do my best to kind of talk through the real truth of what's going on behind the scenes versus what you might hear online from the talking heads. I think that's important, and kind of delving into human psychology, which is a big part of investing, and the discipline of investing as well. And all these things come together, inclusive of the charts, to help us make the right decisions, right? And that's really the bottom line is, make yourself into not a 50-50 trader, but an 80-20 or a 70-30 trader. And then the rest, the math takes care of itself at that point. So again, education, trade signals, it's what I do for people, and check out the track records, I guess.
Yeah, no, I mean, everything is transparent. That's what I was showing on this part of the website, is where the verified trades were given, what the profits were. You can see that there is, a couple losses here and there, but not very many. That's two on this page. So
yeah, it's
and
again, one of them I got caught, luckily it was a small, and that's one of the things I do is I tell people what I recommend in terms of allocation. So even if you get caught in a Terra Luna, it's a smaller percentage of the portfolio. So it only takes a couple wins to negate that potentially.
Awesome. Well, I would encourage people, if they're not following you on Twitter, to make sure they are, because you've done some recent interviews with some of my compadres, our mutual friends, like Mr. Paul from the Crypto Factor, also on with Debate Crypto, and a couple other appearances. So I definitely encourage people to check it out, because one thing I like about you is, you're not one of these people who just goes through a spiel. As far as the charts, you're not going to deviate from that, but the conversations that you have with each individual channel, you're having different information come out from those conversations that you may not get. Like the Kitco news people might ask a question that I'm not going to ask, that's where I say, if they really enjoy what you talk about, to try to get a bigger look into it, people need to check out those multiple different appearances that you make monthly.
For sure. And yeah, I love that each person has a different, your style is different than someone else's, and it is helpful, and then sometimes you get into different charts as well. And it's definitely a well-rounded kind of situation.
Right on, my friend. Well, if you can bear with me really quickly, I'm going to go ahead and wrap up the live stream. I do appreciate everybody for tuning in. Like I said, we were going to keep this one short and sweet. I'm always appreciative of Mr. Gareth Soloway's time. If you have not smashed that like button, be sure to smash that like button. If you're not subscribed, make sure you're subscribed. And I will leave you with this. Be a blessing to others. Treat people how you want to be treated. Be the change that you want to see in this world. Set that example. Practice change. Much love. Have a good weekend. Happy Labor Day.